Hi traders, this has not been a great week to trade. A lot of data spread out of the week, a lot of volatility. This is the Dow on the 27th. This is Friday, wasn't it? So 28th. This is Monday. Nice move down here off of that 50% fibs, and then it's just rubbish. Really sloppy moves, little moves. One decent bar up here. We run up to resistance, we fall back, we run up. It's just really sloppy trading, and if you're not careful, you can kill an account in a market like this. You really can, because unless you just buy the lows and sit in it, buy the lows, sell the highs, buy the lows, sell the highs, do a couple of trades there. But yeah, that's a lot easier said than done, and I'm sure you know. So sometimes it's just worth staying out of the market, unless you just buy the low here and sit there with a stop to break even and see where you end up on the week. And to be honest, that was the best way of trading this market. But that's the benefit of hindsight. All I would say is, sometimes it is. I'm trying to get to the point in the room where we are just taking fewer and fewer trades. But this happened on a Monday when the room wasn't open. This was late on a Monday, and the rest of the market has given us a lot of chop. Anyway, I have given you a video of what I did after I shut the room today. When I was just trading on my own, and I'll follow on from here. But needless to say, a market like this, it's better just to trade with fibs and a 4-hour chart. If you look at the daily, you can see why we're into non-farm payroll tomorrow. If that non-farm payroll doesn't come good, this market's toast, because that is we got 15 minutes till we close on the US. We're marginally off an engulfing bar. So any weakness into the close here now will create a sell signal. In the meantime, that little blue bar across the 2013 highs, and no close above that, we could be in for a nice drop. And a funnel pattern like that can create a really nice move. So you can see why there is a lot of bearish talk out there. Okay, so I honestly think the best thing to do tomorrow with non-farm payroll is just not even to open your platform up. I just think that at least until non-farm payroll is out of the way and the Dow's open, and then see how the market reacts to the data, whatever it is, whether it's good or bad, because at the moment this is just a lot of chop and slop. And that chop and slop can sometimes be a precursor to a big move. And I am looking at that, looking at those charts, thinking this could be a big move. We close like this, and then a lower close tomorrow. That could open the gates to the bears next week. Okay, so that's the Dow. Let's have a quick look at the Nasdaq. Nasdaq, I talked earlier, or yesterday even, about that 3600. We touched 3600 and come off. I'm not suggesting this could roll over, but what we might do is just sit here, and if we break 35.90, we could shoot up to the next level, 36.65. Of course, if we break that low tomorrow, we could tumble over and revert back to the trend, which is the downtrend. Look at all this red parabolic SAR on the top here. All the highs. We're having a very neat series of lower highs and lower lows. But a market like this just could snap to the upside. So that's why I don't want to get heavily short, but I am shorting highs. And that's the key to this: short highs. Don't. I would short this intraday with an intraday 60-minute stop level, and then if it closes lower, then I'd hang on to it, add to it, and then etc. etc. But if we move sideways, hold here and then push up, yeah, I don't want to be heavily short, obviously. Okay, so we need a decision. Tomorrow is D-Day. Gold is sloppy, keeps running into highs and chopping around. That could snap to the upside just as much as it could snap to the downside, but the trend is clearly down. Parabolic SAR has not been busted. The highs, any little runs to the upside are sold into. And it's not the gold season anyway, and we'll talk about that nearer the time when it is gold season. US dollar yen. I am still long US dollar yen on the basis that I've got a low risk, high reward entry, and if it breaks 102, that's fine because my stop's only just under there anyway. A little potential holding bar, difficult to say. We have broken parabolic SAR. It's just a useful little tool. I don't rely on it. It's just a useful little graphic. That's all. If you're looking at a lot of charts, it's easier just to have a little tool hanging over it, so you can make a quicker decision. That's the only reason why I've dropped it on there. New Zealand US talked about this back in last week, and we had I talked about this holding. We dipped lower to support 85.20, and there we are, still closing higher. So it did a little bit of a stop run, or at least a move down to major support before it went up. I did take a couple of slices out of that. The pound Aussie dollar, it's not far off where I sold it. I took a trade over a 5-day period. In fact, let me just go and get the account. So I took a trade in the June contract, got in quite low. It's 169. If you add 24, I'm close to 200. But obviously the spread was quite big on that. But I did hold it. I think there's about 3 trading days and a long weekend, so that's why it ends up being 5 days. And I deliberately chose not to sit in that because of the state of the markets. I did have an opportunity to get back in at 180 and I didn't take that, which is a great shame. Do I think that's going to shoot higher? Yeah, I think the Aussie's not great, so I'll look at that carefully tomorrow and consider buying that and holding that into the weekend. But what I really want, of course, is a pullback, is a drop to 180. But let's see. I'll keep you posted. Euro US. Ooh, sitting there with a reversal bar right on top of that box. What a mess. I mean, if you look at the monthly charts on this, obviously with the first day of the month, so why don't we do that now? You know, it's just not a lot. Very small move. That's moved from 137.75 to 138.80. Terrible. Absolutely terrible. And the pound is better. Not by a whole heap. That's 640 to 890. Pound yen even's not that big a move. Pound yen's even weaker. Look at that. 172 to 172.70. Wow. You know, it's the trouble is with a market like that. If you're not careful, you can kill an account by trying to get in and out, in and out, in and out. Your broker's happy, but you're not happy. So I've sat in this from 169.60, and I'm still in it, and just pushing my stop up. Okay, and oil. Took a slice out of oil, but because these markets are so choppy, I'm happy just to hammer like bar. Low RSI, coming off a lot of support. I'll look into that. I don't want to suddenly dive into oil until we get invents out of the way. So let's look at some stocks. Whole Foods had a reasonable day. Talked about that in the room. That's not bad. I'm right under. We've moved up into the trend line, pulled right back. If you take a trade, be careful. You might want to just leave it until Monday and just see how that closes the week. I am in Tesla. Tesla's popped up and dropped right back. That's a reversal bar under the 50 EMA. That's not bad. Quite a drop. 214 to 206. Wow, that's a big drop. I think I have to be very, very careful with that. Netflix, I've done better. I bought support here on Netflix with a close stop. I'm tempted just to take that off in front of non-farm payroll. I'll certainly ramp my stop up. Facebook's had a good day. So very, very similar patterns throughout the market. Well, certainly throughout that social media market. FCX has spent the week in a very tight range. Dry ships. I'm not in dry ships. I've had an order out. I was hoping to get filled inside the hammer at 285. Unfortunately, I am not in it, and I will leave it now. And sorry, my cat's under my desk for some reason, scurrying around. Okay, so some good markets, some good moves. Diamond Offshore has been terrific last month. Really nice move. Hoping to get a similar thing going in the likes of Whole Foods and Tesla and the others, and Netflix, but have to be careful. Okay, so stay safe. Let's get non-farm payroll out of the way and let's see where we are. Okay, bye for now. Hi traders. Unfortunately, trading this Dow, sometimes it's a question of timing, and timing can mean bending to the US timescales and not UK. This is the trouble with being a European when you're trading the US market. Yeah, the US like to, obviously like everybody else, they like to buy value and they like to sell expensive. They like to buy low, sell high. And so what I waited patiently for this market. I took a move up here. They stopped me out. It went down to, I thought 50 would hold, went down to the weekly pivot. It didn't get, I waited for a pullback of 40, didn't get filled. It just didn't pull back, so I ended up getting in quite high up here. We've currently got 20 points and looking to see if that can push up. Currently got 25 points. Okay, so I mean the room does work. Sometimes you just have to be a little more patient and sit back and let the market come to you. Okay, so I hope that helps, and do join us in the room. Thanks. Hi traders. Just after I stopped that little bit of filming, I actually flipped this. Well, not quite flipped it, but I took it off for this major resistance for 25. And when I came back to my, took a break. When I came back to my screen, I saw this sort of rolling over. I got short here, and I'm going to hold this. I'm going to see if I can hold this into the close, because if you look at what I've got here, I'm plus 28 at the moment, so plus 25 to the upside. If you now look at this 4-hour chart, what I'm seeing here is I'm seeing a 4-hour chart that's got divergent RSI, hitting testing a reversal bar, coming under the underside of a trend line, and a hangman in the candle. So I'm plus 33 at the moment. I'm just going to sit on this. Now what I'm going to do is I'm going to sit here with a hold this overnight if we close low, and I'm going to probably lock in, if I get a reasonable sort of 50, 60 plus points, I'll lock in at least some of the profit. I don't want to give it too much, even though it's it's a pittance. What I don't want to do is for this to slam up and get some nasty slippage or something like that. So I will do that. Now tomorrow, if this market is short tomorrow, what I'll do, I'll leave this on and then I will short the waves. So I'll build my account up by every time. So for example, if we drop further and we bounce, I will short somewhere like there. If we drop further and bounce, I will short there, etc. You get the picture. So what I'm going to do is, and every time I do that, I will move this stop down, then I'll move the stop for that. So that's trade 1, this is trade 2, so I'll move the stop down for that one if we get down here. Trade 3, I'll move the stop down here, and all the time, if this happens, I'll lock in profits on each one of those trades until, if we do start to drop, then I'll be fully loaded with about anything from 4, 5, 6 entries. And I do actually tend to increase my position size when I do that as well, if I get a wave down like that. So by the time I come down here, I could be anything up to 15, 20, 25 pounds a point, depending on how that's done. So although I'm trading up here with beer money, not even beer money, these days you can't buy 4 or 5 people around of drinks with that kind of money I've got on the account at the moment, not in the bank but in the account. But I can really capitalise on my skills as a day trader by looking at how getting into a position for something that might potentially drop this much. I mean, if all this does is come down to support and then zip up, then it doesn't matter, because I'll just manage my stop on the way down. So I'd have captured a decent percentage of that move if this scenario works out. If it doesn't work out, I'm not. It's no big deal, because I've literally not risking much capital at the moment. If you are a swing trader, obviously that's no use to you. What you can do as a swing trader, if it's a very long-term trade, you could do this on a long term. Let's look at how you could have done that on the last down move in this market. Now we engulfed that bar today, so all we've got to do is close under 30, 15 points lower than where we are now, and that's a sell signal. And look at this funnel-like pattern we've got in this daily chart. But I mean, if into the close, if we start closing higher, we end up again stopping out, for example, then I'll stand aside and see where we are tomorrow. Right, back to what I was talking about. If I'd done the same thing up here, got short up here, and then every time over the period of days, if I'd have just shorted these levels, ramped my stop down every time this zoomed down, I could have had a really nice loaded position by the time we got down to this level of support. So it's a way of building a position with relatively low risk entry, risking my risk gets lesser and lesser to me the more I trade in a style like that. Alternatively, you needn't do anything as complicated as that. That's too complicated for you, particularly if you're a swing trader. If this is a sell signal, put an order for a pullback up here, stop above the highs, and then see if you can wing it down. Now, this is not to say that this is about to crash. This is not to say that we haven't got the sell signal yet, because this is still intraday and we don't know where this is going to close today. But I'm just illustrating how you can, you know, watch out for major brick walls. I mean, this is just a major brick wall. These are lots of bricks in the wall, and this will be the fourth brick in the wall. If they can't get through it, then path of least resistance is down. Okay, so I'll go through that in more detail in the room and as time goes by, but so I'm plus nearly 60 points at the moment on this Dow today. So no, I'm not. Sorry, I got a stop out, didn't I? I got a 12-point stop out, so I'm plus about 45, 50 odd points. So not much, but with the potential to get a reasonable trade out of that. Alright, I do hope that helps, and I will look forward to talking to you again either in the room or in the next video. Thanks.